Hey y'all, today I am here with Stacey Huss from Ameris Bank. I brought her in because we have a lot of questions that were asked and I just wanted some clarification on it and to share it out to y'all. So I've got about 4 questions I'm gonna ask her and we're just gonna shoot right to it. So Stacey, what makes a condo warranted or non?
Warrantable means that Fannie and Freddie will buy it. It means it meets all their standard requirements. What typically throws it into a non-warrantable status, which we have here a lot on the beach, is if it's a transient in nature, meaning we have more investors and more renters than we do people who live there full-time as a primary residence. So most of the condos that have mostly second home investment kind of throws it into that non-warrantable. The amenities in the condo development can sometimes throw it into a non-warrantable state as well.
Okay, so basically here in Panama City Beach is because most of the condos are short-term rentals.
Correct.
Okay. So with the down payments, the requirements, what does an investment down payment look like if you were wanting to purchase an investment property?
The rule of thumb is 30%, although there are some products that allow 20% down. Ameris just put out a new suite of products, so we have a little bit more arm length and span that we can do less than a typical down payment. So a lot of it depends on product, a lot of it depends on just the nature of the property, but always know the less you put down, the higher the rate's going to be.
That's right.
So it all is all correlated to interest rate. The more you put down, a lot of times you get a lower interest rate.
Lower rate. And then if it's primary, if it's your primary home, what's standard?
Standard, gosh, it just, again, depends on the product. You know, we have the conventional, FHA, VA. So anywhere from 0 down to 20%. Most people want to stay out of MI. But if you're in that jumbo field, and a jumbo products don't require MI typically if it's over 20%.
So and MI, for these who don't know, is mortgage insurance, right?
Mortgage insurance.
Okay.
So, but again, we have a jumbo product that you can put 10% down, and that would not require MI. Our medical professional loan allows 100% financing with no MI.
I heard you say 0 down, so that's I was like, ching ching. So we have a lot of first-time home buyers that will kind of mention, that they heard you can go in with 0% down, but that's not standard. It's normally 3 to 3.5%, kind of, right?
Correct. If you're sticking with conventional, there is a 97% 3% down program. Gotcha. And then of course you have your VA, and then FHA is 3.5%. But to make those 100%, sometimes there's the down payment assistance programs available throughout the state, throughout the lenders. So there are options for that.
Awesome. Okay. So another thing that we hear around here because of the short-term rentals is, can you use the income off of a certain property to make your loan payment and like not have to borrow?
To qualify.
To qualify. Sorry.
Yes, some people want to have short-term rentals and they want to use it to qualify. Standard Fannie Freddie doesn't typically allow that. Ameris just put out a new program, and I think I've heard it a lot out in the market, is the DSCR, which is the debt service coverage ratio. So if you have a property that cash flows and the rental comes in and covers all the expenses for your monthly expenses, principal, interest, taxes, insurance on that property, we can qualify using that,
and not your income.
And you don't have to disclose your real income, not real income, it is, everything's real income, right? So you don't have to disclose your employer or your personal.
And then the last question would be, can we reach out to you for info if you're wanting to close an LLC? Because I know there's such a wide answer to that. So
absolutely, rule of thumb is no, you have to close as an individual. However, a lot of the banks, a lot of the lenders, you can't, after a certain amount of time, you can switch it into an LLC. We do have a product that we can, although you still have to close it as an individual, at day of closing, you can roll it into the name of the LLC and don't have to wait that it's complicated.
Right.
And a lot of times it's the systems don't accommodate it, and you as the borrower, all your documents have to match. So you as the borrower on the application, on the mortgage, on your note, has to go to title. Title wants everything to match. Then once everything matches and gets done, then it can be flipped over into the
Gotcha. I knew it was a little more complicated,
It is
but
complicated.
it's one thing that we do get asked a lot, so I wanted to touch
get
bases on that.
as
So
well.
I wanted to take a moment and just give y'all a tidbit of information. These are questions we get asked a lot, so I thank you so much
Oh, you're
for taking
welcome.
time to speak with us
Happy
today.
to do it.